What is up? Welcome to the September 2024 market update. And there is so much to cover this month. Really exciting. We've about 2 months into all the new rules going into effect. So I want to give you guys an update on that. We've got updates on mortgage applications. Just like 2 hours before I decided to film this, had a Fed decision, and we've got a difference of rates and a rate cut coming down the pipe. And so I want to talk to you guys about that. So first things first, hope you guys had an amazing summer. We're finally starting to get temperatures to break here. And with that, we're starting to see a little bit of that activity pop back into the market. Our pending sales are up a few hundred from last month. Our active listings are up a little too. So we're starting to see a little more inventory. We're starting to see some more go pending. So all good things and good signs. We're still in a pretty balanced market right now, but it's interesting and something we're gonna wanna pay attention to. Mortgage applications last week are up 14% over the week previous. That's a result of mortgage interest rates coming down. And you guys have probably noticed that if you're in the marketplace. And with that, we're starting to see more buyers jump into action, take advantage. There's definitely a couple different schools of thought about what this is gonna mean to pricing. But for those buyers that are feeling that stress of like, if rates come down too much, prices might start going up again. We're starting to see those buyers hop back into the marketplace, and that's starting to increase our pendings. It's definitely increasing the showings on our listings. And so all good things. I think if you're a seller and if you're a buyer, it's nice. You get to feel a little bit of that interest rate relief right now. So at the end of the day, it's still resulting in a balanced market, but it's something to watch as we go into the next month or so. As I mentioned earlier, the Fed came out, they had a 2-day meeting, and about 2 hours ago, Chairman Powell spoke, and they lowered interest rates 50 basis points on the Fed funds rate. So there had been kind of split whether people thought they were gonna go 25 basis points or 50 basis points. They elected for 50 basis points. And of course the stock market did weird wonky stuff after that because people were trying to read into whether that means the Fed knows that the economy is softer than they were thinking, or whether they were just trying to get ahead of things, or what that meant. Ultimately, I don't think we know those answers yet. Unemployment rate did tick up a little bit, but it's still in the very low 4%, and the economy still seems to be adding jobs and being very healthy right now. Wages went up again, and so we're starting to see that overall, that soft landing that the Fed's been hoping for does seem like it's in play right now. And ultimately, that's gonna be what time will tell. So I think, in my opinion, the Fed went 50 to kind of get a jump start on this, to show the markets and the economy that they're willing to do what they need to do in order to keep that soft landing in play and not send the country into recession. And they've started to worry a little bit more about the unemployment rate versus what they were focused more on, which was inflation, which has been kind of around 2.5, 2.6% year over year. So the question I get a lot is, when are house prices gonna come down? And it's a great question. The answer is, right now, even though inflation's coming down, it's still inflation. In order for prices to come down, we would have to see deflation. So I don't know. Ultimately, it's really gonna be a supply and demand thing, as we've talked about before on this, and it's something we have to watch. As we've seen inventory increase a little bit, we're seeing pendings increase. Not quite at the same speed, but we are starting to see that. And I would anticipate, if rates continue to soften and improve, that we're gonna see the excess inventory that's coming on the market just get absorbed by buyers that have been sitting there and waiting. And as I heard one analyst talk about today, we're starting to see mortgage rates in the low 6s and even high 5% for interest rates. At one point, we were at almost 8%, and that gap between the 4% mortgage a lot of people had and 8% was just too much for most people to take on. But if we start getting in around 5.5% on interest rates, which we're not that far away from, that gap between 4 and 5.5% is probably tolerable for most people. And that might continue to add more inventory. It's gonna make more people do move up and move down moves. And so I think that will just increase the activity that much more. So our pending sales are up a little from last month, but they've been relatively flat. It's something to watch as we see all of these market impacts and factors go into effect. The Fed doesn't have a meeting next month, so their next meeting where they could lower again is gonna be in November. So that's gonna be something that we're gonna have a ton of data, and we're gonna have a market update before the next Fed meeting. So I'll keep you updated on kind of what all the recent things have done in terms of impacting the current state of the market. Until next time, if you guys have any questions, please reach out. Hope you guys are off to a great fall, and look forward to seeing you next month, and have a great day.